But let's shift focus now to the BNSN lens segment, and today we will be talking about Dmart. Dmart came out with their Q1 earnings over the weekend. Also, it was a mixed set of earnings coming in for Dmart. If you look at the pattern, the margins, they were below ET now estimates, while the revenues were in line with the estimates. Today also, if you look at Dmart, is at least actually weak in today's trading session. If you look at what the brokerages had to say, you had Morgan Stanley that downgraded Dmart to equal weight from overweight. They're saying that the Q1 earnings had missed their estimates. This is mainly due to the weak margins. On the other hand, Goldman Sachs had maintained a buy stance on Dmart, and they said that the earnings were below the estimates, mainly on the gross margin front, but they saw a strong subsidiary growth for Dmart in the quarter gone by. So let's take forward this discussion with our experts today, and we have Kunal Bothra as well as Shahina Mukadam joining us. Good morning, Shahina, as well as Kunal. Thank you for joining us on Buy Now, Sell Now. Kunal, I'll come first to you. How is Dmart looking on the charts? Yes, given that due to the earnings, this particular counter is seeing some sort of a weakness, but people who are waiting on the sidelines, is there a scope for entry? Does it make sense to enter Dmart currently?
Good morning, everyone. Dmart is one of the few stocks which we typically call it as a steady ship. Now, you look at the stock, whether it's in a 6-month price performance from the lows of 2,600, or whether it's a recent 3-month performance, or even the performance over the last 14-15 months as well. The stock has gone through a very stable, strong, sturdy uptrend. In fact, the price patterns for Dmart are indicating a range shift behavior. So what I've marked up is the price patterns for Dmart since the inception. And from 2018 somewhere, the stock had started to show a very typical characteristic, which I've been pointing out earlier as well, that it's forming range shift behavior where the stock heads into a breakout range in a matter of short period of time, and then it tries to absorb and consolidate within that band for a period of 36 months to 7 months on an average. And then once the breakout happens, you see the stock typically moving higher to a new range altogether. So we've seen that happening for Dmart quite a number of times, where the stock gives you a breakout, then consolidates, and then the breakout again. Similar is the case right now, where the stock after a recent breakout from 2,800-ish to 3,400 is now going through a bit of a consolidation, which I believe could last for at least a couple of months, if not more. But I think that consolidation should be used as a good opportunity to try and buy the stock, because these are classical stocks which one spots, because on the longer term trajectory, it looks very strong, less volatility, more durability of trend. So Dmart is a stock which I believe is consolidating in the near term, but long term charts are extremely encouraging.
Okay, so on the charts at least it's looking like it's positive according to Kunal. I want to come across to you, Shahina. Good morning from my side as well. This is a counter that a lot of people swear by, despite the fact that it is so expensive on the valuations front. One would think that the long-term prospects for the fundamentals are also strong. So would you say that any dips can be used as buying opportunities? And what would you look for over the course of this financial year, assuming that we don't have another wave of the pandemic, in terms of the operational performance?
I personally also hold the stock as a disclaimer, and I think every dip should be utilized to add on to the stock. This is not to say that the stock is cheap. The stock is extremely expensive, but it has always been expensive and it will remain expensive. And there is some disappointment that came in the last quarter numbers that we saw on the margin front. But I think this, there is a lot of impact that Dmart is seeing because of COVID-related shutdowns. There is a lot of demand issues that is coming in the non-essential space. So I think as and when the economy picks up, as well as we have markets, we have states opening up and COVID issues getting subdued, I think we'll see return of good volumes coming back again. Even the quarter numbers that we saw with the 33% volume growth is not bad, and I expect with the new store opening that is likely to continue. So for a classical stock like Dmart, I think one should take every opportunity on a dip to buy.